Once you've mastered the fundamentals, there's always room to take pricing strategies further, especially as your firm grows and you refine your approach. Advanced pricing is about moving beyond the traditional models, looking deeper into the client value and embracing the latest tech tools to help you set up and adjust the fees with precision. Here are a few insights that I have found that can help you elevate your pricing game. Segmenting your client base. Not all clients are the same, so why should we then be priced the same? Client segmentation allows you to categorize clients based on factors like industry, business size, and complexity of service needs. By creating categories, you can afford tailored pricing and better reflects the workload and the value for each group. For instance, you may develop a pricing range from small startups versus established companies with higher compliance needs. Segmenting allows you to set price points that align unique needs and profitability of each group, ensuring every client feels they're paying the right price for the right service. Action steps. So on this one, firstly, identify key client characteristics that impact pricing. Examples, industry size, compliance, etc. Step 2, create the client segmentations based on these characteristics and outline some typical services or workloads for each. And last, set tiered pricing ranges for each segment tailored to reflect the workload, risk and complexity. Using data for pricing decisions. Data is becoming one of the most valuable assets for firms fine-tuning their prices. Advanced tools and software like Engaged or Pricing Calculator Times Up allow you to gather, analyze data on how long these services take, which types of tasks are most common and time intensive, and even clients continue to use things, and you must improve your bottom line by tracking time, frequency and workload through data. You can identify the current pricing may be leaving money on the table and adjust accordingly. There's nothing worse where you leave money on the table, you've underpriced it. You just need to make sure it doesn't happen. So the action steps. Firstly, identify key data points to track. Hours per service, service frequency, client profitability. Next, set up basic tracking system where Excel or another tool. And lastly, regular review the data monthly, quarterly to spot where pricing may be adjusted due to higher workloads or increased investment times. Consider value-based add-ons. For clients seeking a bit more from your services, value-based add-ons can be a great way to offer additional services at an appropriate price. Think beyond standard packages and consider what additional support could benefit the clients, such as monthly financial coaching, cash flow forecasting, or advisory sessions. These add-ons allow you to increase revenue while delivering tailored services that clients find genuinely helpful. Each additional service should come with its own pricing equation, built to reflect the specific work and the client's benefit involved. So the action steps. Firstly, list the common challenges clients face that your firm can solve additional support. Monthly cash flow reviews, tax planning, etc. Next, design add-on packages around these solutions with clear pricing and benefits. And lastly, communicate with add-ons during the initial client discussions, showing how these extra add-ons can give value. Now, something else that we should cover is dynamic pricing. Advanced pricing tools make it possible to go beyond basic calculations with an enabling dynamic pricing. With these equations, you can combine multiple KPIs into more complex formula that adjust prices based on multiple factors simultaneously. For instance, instead of a flat monthly rate for payroll, you could incorporate variables like number of employees, pay frequency, and complexity of tasks to calculate the rate automatically reflects the true workload. So the action steps. Firstly, choose a complex service. payroll or VAT returns, where factors like transaction volume, client size, and frequency significantly impact the workload. Next, break down the equation for each service using your tests in a tool like Excel to get you advanced pricing. And lastly, automatically do these calculations so they can be applied constantly across all clients. Embracing automation and efficiency to increase the margin. Finally, consider using automation to keep your progress lean and your margins high. Automation tools, whether for transaction categorization, document management, or payroll processing, can save considerable time, allowing you to take more clients without increasing the workload. By building automation into your workflows, you'll be able to increase the value you deliver while keeping the costs down, giving more flexibility to the price competitively and increase profit margins as your efficiency increases. You may even consider passing some of these savings back to the clients as a loyalty rewards, building trust and long-term relationships. So, step 1, identify repetitive tasks where automation tools like bank reconciliation software or invoicing could replace manual work. Next, select a tool that integrates well with your practice and consider the cost relative to time savings. Lastly, implement automation gradually, starting with one task at a time to ensure a smooth adoption.